All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, August 27th. So, as usual, we'll go over today's price action, a little bit of today's option activity, my thoughts, strategy for today and going forward for the rest of the week, what's trending, what's not trending, which I think is really important. We'll talk a little bit about that, and then, of course, we'll talk about we've got the technicals of the S&P and a couple of the earnings movers. So that should be enough for a 10-15 minute video. So yeah, first things first, let's go over S&P futures. We're at this what a mess, right? The last month. Talk about a downer of a month. A lot of, as I normally say, back and forth movement, right? We've been exploring both sides of this triangle. We're leaning on the bottom side of it. We were here yesterday and started the day positive and finished in the red today. Not a great day for the bulls, especially this is basically how it's been these days. When we start the day in green, the S&P and the major indices just cannot hold on to it. It's very difficult for that to happen, unless we're coming from something like we were yesterday, which was really, from a low place. But yeah, that continues to be the theme right now. And how would you categorize this price action, right? It's basically sideways. We haven't found a direction yet in terms of up or down in the S&P, and we're kind of just waiting to see how this moves. So as this is developing, what I've been trying to do, and of course the video is for information purposes only, not giving out any advice or recommendations, but really just kind of position myself through this. I'm holding a bit more stock, as we ping pong back and forth here. Stock really isn't going to get hurt that much. Now, if we break the 200-day moving average, it is, and I'll get stopped out in some positions. But what I'm trying to do is basically just sell premium on days like this, which I did right in the beginning of the day. I didn't think that we were going to be able to hold today's gains or power through them. It seems to be the same type of thing where, and I've been talking about this a lot, over the last couple weeks, but it seems to be that there's a sell program or just somebody liquidating, which happens, right? Funds are forced to liquidate sometimes, or they're either lowering their exposure or they're getting forced to lower their exposure. But it seems to be happening right at 940 to 945. This wasn't as dramatic, where we've seen it a couple times where the first couple 5-minute bars we try to go higher and get smacked. I think we lasted maybe this was 945. So, we were hung in there till 945, try to go higher here in the S&P. And then sometimes just people have, funds have these programs that don't start right on the open. They wait till like 10 or 15 minutes and then they start selling. So again, I don't blame like the algos or anything like that. I just think people have to sell for either they're reducing exposure, or they're being forced. They're being forced to liquidate, and they have to sell. I don't think there's anything predatory going on with algos. It's just the case. So that's what I did, and I'll show you my trades for the day as always. I try to take as many targets here in the first 15 minutes. I was in this Zen that I've been kind of flirting with back and forth, getting in and out. I got into this yesterday, so took some profits right on the open. Took another target at 970. Was in some VEVE looking for a little bit of an earnings run. Got out of that, and then what I did was right around 943. I said, hey, I'm going to sell some premium. I don't think that we're going to go higher for the day and in the short term. So I later covered that for around $2. But, and then, I see option activity on the tape, and, I have to remind myself, well, I didn't think that we were going to be able to have a strong day in the indices. So I dumped it, right? 15 minutes later, just seeing what was going on with the price action. Bought a little bit of Newmont today, got stopped out in a BSX trade. So that's basically how it's been going, trying to trade very light. lighter than normal if I'm going to trade options, and I really didn't add any stock positions or didn't take off any stock positions today. So let's go. So that's a little bit of the price action. We could see S&P is still weak here. Option activity for the day. We saw some Yelp calls today. These are chatter that somebody's taking a stake or something. I didn't follow that trade, but that worked. A lot of gold buying. So here's the thing, right? I look at this S&P chart. Right, we'll go back to this, and if you're not a member of Tribeca Trade Group, I say this all the time. This is what I put out this weekend, right? So I talked about this weekend, and I put it on Twitter today. But until there's a trade deal, I think the buying the dip is going on in different places, right? So again, this is not a trend right now in the short term. Now it could definitely straighten itself out, and we could see more trend-like markets. But if we go through this, and we go through the Qs, the Qs have been consolidating not only for this period, but just we've been trading in a range, right? For the last since April, right? It's a pretty big range, but it's a range. IWM looks horrific. IWM finished down 1.5% after starting the day in green. This is getting very close to breaking, which is concerning to me. If you look at microcaps, they've already done it, right? Microcaps are in a downtrend. That should also not give you so much, tell you that this is a risk-on market when you see microcaps. And I know people, including myself, have been really analyzing the components, trying to think of a reason what's going on with the small caps. But it's risk off. And I look at ETF flows every day, and that's basically been telling the same story. Briefly, like just a couple days last week, tech was leading sector inflows, and I haven't seen that for months, I would say, in terms of tech leading the inflows. It's been all about utilities, REITs, consumer staples have been the sector. These are the areas that have been capturing new money, in terms of ETF fund flows. Industrials have been seeing outflows, tech mostly outflows, besides a little bit of inflows last week. So what's trending, and we might get a downtrend, right? That happens in equities. Don't know that yet. But what's been trending and what's been being bought is gold, right? This is a new, trend that's emerging. And this has been going on for a while. So if you've been listening to my videos, this is nothing new. Silver somebody asked me today, they're like, why do you think silver is going up more than gold right now? And I'm like, well, I don't know. I'm not a precious metals expert. But what I know sometimes is it's sometimes there's catch-up trades. If you look at this weekly chart, it is just breaking value. So I don't think it's gone up nearly as much as gold has over the last couple weeks. So I think people are really interested right now in silver. And this is, if the Fed, remember, it's not just a flight to safety, but it's also quantitative easing, right? Globally is going to bring people more into this as well. So it's kind of it's got a multifaceted type of trade reasoning behind it. I think is that global quantitative easing, I think, will put people more into precious metals. And then bonds, right? So I think for now, as long as the trade, so this was really interesting. I mean, these are big moves that's taking place. For TLT, not too long ago, did not move 1.5%. I was showing this chart in the midday video. Look at the average true range, which talks about the average true range measures how much that a stock or ETF or index normally moves. You could see it normally moves $1 is the average true range. Since August, it's been moving double that, right? And even more so, 260, 270. So, really you're getting a lot of bang for your buck by trading bonds. And this is the one that's, so again, just like any trading strategy, chasing sometimes is a very difficult thing, but you do get opportunities where bonds are down for the day, and we saw that last week, right? We saw a couple of days where bonds were down for the day, right? So you're going to get I think that you'll, I don't have a crystal ball, but my opinion is that you will get days where you'll get dips. And I think it's important to pay attention to. I mean, that's a nice looking bull flag. And I think it's a similar situation with gold, silver, and the miners too, which I didn't even get to talk about either. But of course, this was kind of seeing a little bit more call flow than normal today in names like gold. AUY has been seeing some call activity as well, but a lot of the gold miners. So if you're adopting that standpoint that these are the groups that are now trending versus stock, and again, not all stocks aren't trending. I still think that there's opportunities in various different groups, right, that I've been talking about for the last couple months, right? And I would stick to more quality names. But yeah, I mean, here's what I wrote. So if you're not a member of Tribeca Trade Group, I set this up for the week, and try to give a game plan. I see a lot of people talking about this stuff today. I think we've really been ahead of the curve with most of this. But I also think for now, equities are sell the rip. So that's what I did today. And again, I always try to practice what I preach. But yeah, I think sell the rips, take profits where you can. I think some overnight trades work. But I think it just seems like there's much more resistance trying to go higher in equities than some of these other areas. So again, for now, right, while there's while this trade war is going on, I think if that changes at some point down the line, then this might flip, right? It might be sell the rip in this stuff and buy the dip in equities. But for now, it seems like that's where it's going. I don't think it takes a genius to figure this out. Just looking at what is going up and what is going down over the day. And again, this is nothing new. This is not this week. This has been going on now for more than a month. I think in terms of seeing, for the most part, when we come in and equities are up, they get faded, and they get faded pretty hard. So this is the performance from the open today, and you could see the small caps just getting dinged right off the bat. They finished down 1.5%, but from open they started the day up 0.5%, and then you could see these two areas, right, which is again has been a theme now for a couple months. They're the outperformers. You can see golds here, GDX. I should have the silver miners in here at this point. Utilities holding up a little bit better. I've been also talking about how the FANG stocks have not been acting very well, which is fine. You don't have to be be involved in the FANG stocks. But even yesterday, I was saying this in the midday video that I sent out, that even yesterday with the bounce that we saw in equities, the FANG stocks weren't the ones that were leading the way. They look like they're just overall kind of tired. And again, that's nothing new there as well. All right, a couple names after that reported afterwards. I'll start with the bad. Autodesk looks like it's going to be taking out that 135 VPOC. They had good numbers, but they reduced their guidance. I did play this. I tried playing a call spread for Autodesk. It didn't work. And then Vive, I did the opposite. I sold a put spread, so it looks like I'm 1 for 2 for earnings as long as it kind of stays right around here. Again, is selling a put spread, and then I sold a further out of the money call spread. So that should be, so far, I don't know how it's going to shape up, and they've got to get through their earnings call. A couple other names that reported. HPE, I think, is up a little bit. It's a low price stock, but so that's it. I keep saying, in the trading room, like once we get past like 9:15, 9:20, as it's been in the summertime, it's like time to go feed the ducks. Basically, take your profits on the open, and I've been using a joke to try to help people a little bit and saying, hey, I think that's all we're going to get for the day. You could go and feed the ducks, go to the beach, go for a bike ride, because unless you're really playing stuff heavy to the downside and shorting things on the open, I don't think there's much to do besides those areas that are trending. All right, guys, so that is it. Be patient with the market. We're almost through August. Maybe once we get past Labor Day, things might change a little bit, but we'll see. We'll have to see how that materializes next week. All right, guys, have a great night. See you tomorrow.